Hello, everyone. It's that time of the month. We're going to be looking at the latest statistics for the Toronto area's housing market for April 2024. And of course, as always, rather than looking at the entire GTA and both house types together, I'm going to break them out by houses and condominiums because both segments are doing slightly different things. So it's important to unpack those. I'll look at even some regional differences for each. And then finally, I'll wrap up by taking a look at the latest stats for the condominium rental market in the Toronto area as well. So we're going to kick things off by looking at the low-rise housing market. So that is, semis detached row houses in the GTA. And first off, we're going to kick off and look at the number of sales. Came in at 4,300, which is down about 5% over last year. Now, if we look at the number of sales for the month of April across each region and compare that to the 10-year average for each region, that's what this does. So in blue, we have the number of sales for each region in 2024 compared to the 10-year average for each. We can kind of see that sales are a lot softer than they normally are for this time of year for all regions. Probably Peel seeing one of the biggest percentage declines out of all the regions. Durham and Halton holding up a little bit better, but all the regions are seeing a relatively big decline compared to the 10-year average. I'll note that it's not in the chart here, but the 10-year average does not include 2020 because that was sort of peak COVID lockdowns and the market pretty much fell off a cliff, so that would skew the data. So it's a 10-year average number of sales for the month of April for all the previous 10 years, excluding 2020. So that's what that is. Now, when we look at the number of new listings, 9,600 new listings, up 42% over last year. Now, when we like last year was one of the softest periods or first quarters for new listings volumes. It's one of the reasons the market was quite competitive last year. But when we compare new listings volumes for the month of April compared to the 10-year average, again, we're slightly below, not as below as soft as sales, obviously, but we're below the 10-year average in terms of listings volumes for the month of April. We can kind of see that in the chart here. Now, when we look at the number of active listings, there are 9,500 active listings, up 81% over last year. Obviously, a big increase. Now, when we look at this, and it's well above the previous years, when we compare this to the 10-year average, we can kind of see for most regions, we're seeing higher active listings than normal, Durham, Peel, and Toronto. For Halton and York, we're slightly below the 10-year average, but these are minor differences. I'd say that active listings volumes are pretty typical for the month of April across all of these regions. Now, when we look at the months of inventory, and for anyone who's new to the channel, that is just basically saying, okay, how many homes are active listings available for sale? So the 9,500. We divide that by the number of homes that sold in that month. And then basically that tells us how long it would take the active listings to sell if no other homes came on the market, in theory. And this is just a measure of the balance between supply and demand, and it kind of shows us how competitive the market is. As months of inventory declines, the market gets more competitive. As months of inventory increase, the market is cooling. And what we saw last month is months of inventory actually ticked up a little bit from 1.8 to 2.2. So again, a sign that inventory is growing or changing at a faster rate than sales, which is allowing a little bit more inventory to accumulate in the market. Now, when we compare what months of inventory were like for the Toronto area last month in April compared to what is typical for the month of April, again, we're going to see here that we're quite a bit higher than we typically are. I mean, usually we see just over 1 month of inventory. In most markets except Durham, we're just over 2 months of inventory. So the market is technically a little cooler than it typically is. It's very interesting for me on the ground because we still find it pretty competitive. I mean, our clients that are looking are finding it quite competitive, we have clients looking for starter homes. Many of those are getting bidding wars and multiple offers. Even homes in the higher end, 3, 4, 5 million, those are selling relatively quickly if they're priced well. I mean, of course, there's some inventory that's sitting on the market, most of which is priced high, and that's why it's lingering. But most homes that are priced well are still moving pretty quickly, even in the higher end. So Again, interesting to see this. I mean, it just tells us that usually spring is more competitive than it is this year. So in some ways, it's important for buyers to keep that in mind because things could be worse and things could be even hotter, more competitive, at least compared to historical trends. When we look at the percentage of properties selling for above the asking price, that's 50% of them dipped a little bit last month, and which makes sense kind of as months of inventory ticked up. Average prices were 1.42 million, which is basically flat compared to last year. So no change. Again, we compare year over year to account for seasonal differences. Now, when we look at the condo market, we see condominiums, 2,600 sales, roughly down 7% over last year, a fair bit below the previous years during COVID. And when we look at sort of the 10-year average and regional differences, I mean, these stats are going to look a little bit weird because Toronto obviously is sort of the dominant segment for condominiums. But sales are a fair bit below the 10-year average. You know, the city of Toronto, for example, would typically see close to 2,000 sales of condominiums for the month of April. And last month we saw about 1,500. So we're a fair bit below what is the typical average for the month of April. Now, when we look at new listings came in at 6,700, up 56% over last year. So strong growth in new listings volume. And when we look at that compared to the historical trends, new listings are actually quite a bit higher compared to what we would typically see. I mean, typically average for the city of Toronto, maybe around 3,500 new listings. Last month, it was about 4,250. So again, slightly stronger new listings volumes in the Toronto area. Most of the other regions were, you know, relatively close. Again, they don't have quite as many listings as the city of Toronto does. Active listings, again, we can see here quite strong, 8,600, up 83%. Again, almost double compared to last year. When we compare that to the 10-year average, we're well above the 10-year average when it comes to active listings for the month of April. In particular, in Toronto, we're seeing a ton of active listings hitting the market. And again, part of this could just be you know, new completions, people wanting to sell their condominiums, or potentially some investors wanting to exit. We'll take a look at some of the data. I'll take a look in the future to see what's driving some of this increase. Months of inventory ticked up a little bit to 3.3 months of inventory, up from 3. So again, a slightly softer market compared to the market for low-rise homes. And again, when we compare what months of inventory looks like this year in April compared to previous years, we're significantly higher compared to previous years, you know, almost double, I'd say, in most cases. You know, typically we have just under 2 months of inventory in Toronto. Now we're just under 4 months of inventory. So a much slower market in the condominium sector than we're used to seeing for this time of year. Homes selling for over asking, that was about 26%. No big change over last month. And home prices or condo prices came in at 754,000, which was basically flat over last year. And again, I think the slowness that we're seeing statistically in the condo market reflects what we see in the ground. Showings are softer. Condos will sit on the market a fair bit longer than houses. You know, where the low-rise market is still a little bit more, quite a bit more competitive, I'd say, than the condominium market. And actually, I'll wrap up by looking at the months of inventory for each house type on a weekly basis, because we'll see these dynamics. I've touched on them last month of how the market is kind of cooling. We can kind of see on the far right how the, you know, months of inventory is plummeting. The market was heating up as began the year. And then we've kind of plateaued, and now months of inventory is gradually increasing. So again, this is a sign of sort of the momentum of the market is slowing down. It's still competitive, but it's not heating up. So again, if it picks up again, you know, if we think about what the market was like in November, December, when things were slow and properties were sitting, that's kind of the peak in this chart where, you know, months of inventory for houses was around 4 months, condos was around 5.5 months. The market in the fall of 2023 was quite slow. A lot of homes were just sitting on the market, very few multiple offers. And again, so if inventory builds up, that's what we can expect. I suspect inventory will kind of flatline at some point. I don't think we're going to see a huge buildup, but it's interesting to see that we're not seeing inventory decline as we move into the spring market, that we're starting to see it pick up a little bit and take some pressure off price growth. Now we'll take a look at quickly at the rental market. Condominium rentals leases were up 36% over last year. Again, pretty strong lease growth for the month of April. Now, when we look at new listings for leases, those were up 48%. So this is the number of condominiums being listed for rent on the market. We saw a strong number of completions over the past, 6 months or so, and certainly in the first quarter, and that is probably also contributing to the number of rentals kind of hitting the market. Active listings for rentals are up 118%, more than double over last year. So a decent amount of condominium rental inventory. Interestingly enough, months of inventory, of course, there's a lot of seasonality with it, with condominiums. So it's falling from previous months to just over 1 month of inventory. But again, that's seasonal. It's still quite a bit above previous levels in terms of months of inventory over the past 3 years, where we'd have like less than 1 month of inventory. And again, it's worth noting that even with 2 months of inventory, that's a soft market that basically saw condo rents actually dip. And if we look at condo rents more closely, prices came in at about 2,700. So we're basically flat over last year, but we're still below the peak that we saw in August of 2023. And a lot of that, again, is all of this inventory that hit the market that took pressure off rents. So we've seen some declining, softening rent prices, and we'll see how long that goes on. Again, rents ticked up slightly last month, but I think as we move to the spring market, we might see some of that inventory start to clear. I hope you found that helpful. If you have any questions about the latest statistics, please post them in the comments below or send me an email at askjohn@movesmartly.com.